We talked about the cloud. I kind of want to talk about more personal computing when it comes to Microsoft, because Windows revenue for the OEM business beat consensus. I think maybe we can read through some of that, at least into consumer demand, and it might shed some light on Apple, right?
Yeah, I mean, I think we need to take a step back and think about how the entire market has been operating like we're at a buffet and just piling anything onto our plates. You know, meme stocks, industrials, big tech, small cap. But I think this is a pivotal week, because even how we are talking about how two major beats are actually diverging. You know, what is the actual future of growth here? I think this is exactly what we need to be looking at. And personal computing, OEM devices, as you're talking about, John, Microsoft has to build things. Microsoft, their revenue is still not operating at the insane margins that Alphabet is, because they are building physical things. The operating margins of Alphabet from from yesterday's results, 29.7% off of growth of 34%. The most incredible part to me was Alphabet grew their revenue 34% year on year. They only increased headcount 14%. That money is just magically, exploding. And Alphabet's biggest strategic challenge is almost kind of how to hide all the money and cash and profitability oozing out of every corner of their business right now.
Is there a danger here of some of the eBay Amazon effect, where early on, when it came to consumer e-commerce, it looked like eBay just had the better model because they weren't dealing with the physical stuff, and people were saying, oh, look at all the money that Amazon's got to spend while eBay is just spinning off cash? Well, it was infrastructure that it turns out was important to the future. Could it be that you've got one company that's building out some physical infrastructure that's going to be important to the cloud into the future, and another that's not?
Yep, I think that's a great point, because Microsoft, the acquisition of Nuance, which will give them a major leap forward in the healthcare space, using natural language processing and natural language understanding. That stuff is raw infrastructure to build a major services business. That's not just digital advertising revenue. That's not adding and stuffing more ads into a YouTube video and making us all hit skip ad twice nowadays. That's, a real long-term business. So I do agree in terms of where that eventual growth can come. Again, the hardware businesses, the AI services businesses, cloud services businesses, yes, that can matter. But any investor that looks at Alphabet's numbers from yesterday and doesn't at least get a little bit of an appetite there for just, how profitable and how well operationally executed every part of their business is, it's tough to look away from that. And that's why the stock's up 5%.
Ranjan, good morning. It's Deirdre. If we're looking ahead and we're looking for the next growth engines, to use your analogy of a buffet, when you look at a company like Amazon, there's no shortage of growth stories there, whether that's cloud, advertising, groceries, its own hardware. What are you looking for? Do you think that investors want to see that growth engine beyond e-commerce, which has, seen incredible demand over the pandemic? And what do you think that next engine will be, leaving cloud aside, because we already know that is now a $10 billion plus business?
Yep. I think cloud, the infrastructure side, everyone, it's not quite mature, but it's moving in that direction. Cloud services, again, AI services, I think will be a huge part of a lot of these companies' growth engines. But again, the other thing that's difficult to remember is when you're $2 trillion market cap, finding growth isn't that easy. But if they are to find it, if they're to find brand new markets, it has to be in that AI services space, which is where, again, Microsoft, I think the acquisitions they've been making, the way Satya Nadella has led the company, I think has really pushed them in a very strong direction. The market doesn't appear to be seeing it that way, at least for today.